Hey guys, welcome everyone. Thank you for joining us again on Binomo World. Today we are discussing a new topic, specifically zeroing in on our on my trading transformation journey, how I become a more successful trader than I was before. And it's a journey of many steps, and I want to share that with you. Hopefully, you can get the takeaway, take some tips from my experience, and see where you can improve your trading. And this is basically a guide for you to improve yourself as a trader, one habit at a time. Okay, so I was a trader who started out with the stock market. I traded stocks in the US for a couple of years. There were a few lucky super profits that I made, and there were more losses than profits in the end. But I started my first 2 years making a huge amount of profit, and after that, things went south, and I never recovered. Then I moved on to taking a break from the financial markets because it was a lot of disappointment. And I'm sure some of you guys can relate to this as well. It was a lot of disappointment, and I'm getting a lot of reading done during the time when I was taking a break from the markets. And from time from time to time, I would set up a stock account again and start trading again during my break. Uh, I went in with smaller amounts of capital than before, and I realized that even with a lot of reading and research about mostly fundamental analysis, I wasn't really getting anywhere. Yeah, so I see some of you guys are here. Samajit from India. How can you be successful in trading? Thanks for joining us, Samajit. This is a video for you. This is a live stream specifically for you. I can share with you my experience. Balkan, moving average strategy for 1 minute. We discussed it yesterday, Balkan. Thanks for joining us again from Hyderabad. So during the times I was taking a break, like I mentioned, I opened a few more accounts and traded small capitals, but mostly I was doing fundamental analysis, and I didn't really get anywhere. Some wins, some losses. It wasn't fantastic. The returns were not so much different than I was before. Maybe it was a bit more stabilized. Maybe it was a bit of mixed results. Maybe I make 10 trades and I will probably get 6 losses and 4 wins, or maybe 4 losses and 6 wins, but all in all, it was consistent, more or less break even, but slowly trending to losing when I make more mistakes. So all my reading were focused on fundamental analysis. So I thought that my problem that I need to fix was improve my fundamental analysis, improve my research on what I was going to trade. Truth, after a few rounds of continuously losing more money, I took another break, and this was also a few years. And then I stumbled into forex trading, as well as technical analysis. You will find in communities and in wherever you go people talking about forex. These are the guys who would talk a lot about technical analysis. Fundamental analysis, not so much. There is fundamental analysis in FX trading, but more technical analysis, more charts, more patterns, more setups, more demand zone and supply zones, and how the chart or price action is reacting to the news. So I went into that, and I realized that there was a lot of things missing from my earlier years of trading. I did not know about position sizing. I did not know about risk management. I did not know about stop loss and take profit. I did not know about um, a whole lot about technical analysis. I know support and resistance, but I don't really know how to use it. They look really simple. There's an upper line and there's a bottom line, but it is more complicated than that. Not too complicated like scientific rocket science, it's not. But you have to have experience to use it in conjunction together with other indicators, okay? So That was eye-opening because then I started to trade forex to try out my new skills, my new technical analysis. And then at the beginning, I was only doing technical analysis because it was so much interesting. It was showing me how I lost a lot of money when I traded stocks many years in the past. You know, technical analysis showed me that I could have avoided all those losses had I knew how to read charts and had I knew that trends were changing. You know, the thing about fundamental analysis is sometimes you believe your fundamentals even when the market doesn't believe or doesn't care about your research, doesn't care about your financial analysis of companies. You know, they don't care. If the market is going to change direction and you stick to your fundamental analysis and the market continues to change direction, you won't know anything about it unless you know technical analysis. So that is the benefit of technical analysis. Now I'm able to read charts and tell you where the trend is strong in the up direction or in the down direction, or if the trend is weakening and about to turn. And if the trend has turned, I can tell you with some certainty that the trend has actually turned, and you should not trade in the original direction. You need to change your direction. And of course, over the couple of years that I've done this, just looking at charts, just using technical analysis to trade, I then realized that you need to know fundamental analysis even when you're trading forex, even when you're trading currency pairs, even when you're trading Bitcoin, you know, all the assets you have on the platform. You need to know some fundamental analysis, and that is why on the platform we have the section news, which is right here, calendar. Okay, so these are the kinds of fundamental analysis that you would do on the platform. It will show you when some economic news is going to happen, and when some decisions relating to certain countries as well as currency pairs are going to happen. So you need to pay attention to what that piece of economic event is and whether it's minor or major. Okay, and it will cause volatility. Any piece of news that is major is going to cause volatility, and if you are in the trade, you need to be careful, because when things are volatile, it could change direction in the short term. So if your trading is also short term, you could lose out. If you open a 5 minute trade and there is a short term change for 15 minutes or half an hour, 30 minutes, you could lose out on your 5 minute trade. So you need to be aware of it. And they also influence direction, and you use technical analysis in the situation where fundamental analysis affects the direction of currency pairs. You need to use technical analysis to tell you when exactly to go in. It will tell you the right entry point, so that you can maximize your chances of making profits from your trade, whatever the direction. So the journey that I had, the transformation that I had to undergo as a person, as a trader who's trying to grow my account balance, was really moving from specific phases. At the beginning, I was I did not know about trading psychology at all. Okay, so I did not know, sometimes when I was making decisions, it was overconfidence, and it was based on my emotion, based on my previous winning trades. Now, after I left that phase of my life, which was a bit chaotic because it was just going by gut feel, going by confidence that I had in me, that was not based on analysis. My confidence was based on my thinking that had no analysis. You know, I've done some fundamental analysis, but it had no analysis in terms of what's really happening to the price, what's really happening to the asset, to the currency pair. It didn't really it wasn't based on any analysis. So I didn't have a mental framework. So I was really, when I opened new trades, it was based on my feeling about what's going to happen, not based on what I am seeing happening to the price structure. So when you do technical analysis, you learn about price structure, and you know there's a right time to buy something, there's a right time to sell something, and there's also the wrong time to be buying or selling in the market. So when I moved to technical analysis, I moved from that emotional phase to more calm and structured phase. I have specific steps that I need to take as a technical analysis trader. I need to see certain things happen, and I need to see that thing happen over time. And then even when it happens over time, I need some specific confirmations using a few indicators to validate that whatever I'm assessing to be true will be proven by other technical indicators. So that's how I achieve a certain level of peacefulness or calm thinking, because I use analysis of what's really happening to the chart, to the price, to the pattern before opening any kind of trade. Okay, whether it's an up trade or a down trade, and how long the trade duration is, because you have to set that before you set your trades in the platform. And then I also started to write things down. Whenever I lost money, even now when I've made the transition from fundamental analysis to technical analysis, and then from technical analysis to a mix of both fundamental and technical analysis. Um, in the past, I didn't write things down. I only write things down when I make profits. I don't write things down when I'm making losses. Not anymore. Now I will write all my trades, and I will write if I lose money, what was wrong about that trade. I will write it down. If I make money, what was right about that trade, and is there anything I could learn? Because sometimes when you open an up trade, sometimes the asset changes direction and starts to go down, and then maybe later it will continue and move in the up direction. If your trade duration is longer, then you will be able to still profit from that trade. But whenever that situation happen, I will analyze it after my trade is closed and see whether I could have predicted that turn in short-term turn in direction. Was that something that I could explain from my analysis? Maybe I overlooked something. So the thing is, I write down my lessons learned. That is how I'm able to tweak or make some small changes to my strategy so that it becomes an even better strategy. If I'm not getting the best entry point, sometimes I lose money when I open an up trade, and because the entry point is not the best, sometimes the volatility keeps it down below a certain level, below my entry price. Therefore, I end up with a loss. But given 1 or 2 hours, 1 or 2 more hours, a slightly longer time frame, I would have made profit because it continued to go in the up direction. So by writing things down, I'm able to see the weaknesses or the mistakes that I'm making. Okay, if you don't write it down, you won't be able to track it. You can think and try to remember from memory. If you make 10 trades in a day, you can't remember all 10 trades. So all the situations that has happened in a particular day, write them down. Okay, and then uh, so that was one thing. Moving from emotion based trading, move to a structured based trading based on technique, based on analysis, based on both technical and fundamental. The other thing about the transformation that I had was I started to read up a lot more. You would think that when somebody moves from fundamental analysis to technical analysis, they would read less, because in technical analysis you would just look at charts and not reading any text or learn anything new. That is so wrong. You learn a lot more. You have to read a lot more when you're doing technical analysis, believe it or not, compared to fundamental analysis. Because the thing about technical analysis is there are maybe 50 or 100 patterns out there. Okay, but you're not going to remember all of them. You're going to I've learned that if you try to memorize patterns, or if you take a book of technical patterns and try to read them and look at the chart on the market and then look at some of the pages and try to match the two together and then trade that way, that's a mistake. Because those patterns that you see in a trading book, that is it's like a dictionary. It doesn't tell you when is the best time to use this pattern for a certain market situation. It doesn't tell you when is the best time to use this pattern for a particular time frame. When is the best time to use this pattern after an inflation report, after a jobs report, after an NFP, after an interest rate decision. So the situations are real and happening every day on the market. The books, the chart patterns on on the pages in the book doesn't tell you that. They just tell you what the pattern looks like. Three white candles means, or three green candles, okay, it's a bullish sign. Buy, open an up trade. But no, there are situations in the market, there are contexts in the market that you have to pay attention to. and sometimes you use it in the opposite way. You know, when the news is in a specific direction, it is pointing in a specific direction. For example, if we are looking at, let me look at what the asset is on my platform. Okay, so if I'm looking at gold, and then suddenly we get the news that shows dollar strength. Okay, so a news that could show dollar strength is inflation picking up. Okay, because when inflation goes up, or reported higher than expectation, what that means is interest rates would probably not be cut, and it would probably stay where they are. Or if inflation is really hot, if CPI is really hot, then interest rates might even go up. That will push the dollar up, that will give strength to the US dollar. So because we know the expectation is like that, okay, so when you see the piece of news coming up, and then the news comes out with a strong CPI or inflation number, now you know dollar strength is going to happen, but you are not seeing it. But instead, you are seeing three red candles. So that's a reverse pattern of white cross. You're getting three, get a bearish signal. That's a bearish signal when you have three black or three red candles happening in a sequence. So you won't trade the down trade based on the bearish signal of the three candlestick formation. Instead, you would use that as an entry point for an up trade for dollar strength. So if you were trading USD JPY, or if you're trading USD CHF, so you know that with a high inflation, US inflation, that those two particular assets might move in the direction of showing dollar strength. So when I see three red candles, technical analysis books will tell you, ah, that's the time to sell. No, I use it as a time to open an up trade. Okay. Of course, it's a bit more complicated than that. You need to look at the nearest support, the nearest resistance, and things like that. But basically, what I'm trying to tell you is you can't just read, and you can't do technical analysis without a lot of research. That research involves reading as well as learning how to use the knowledge you get from your reading in the real financial markets, in real charts. Okay, so it is actually more learning for me to be doing both technical analysis and fundamental analysis. um, and then I would have to not only rely on books, I have to talk to a lot of traders, I have to follow a lot of traders on Twitter, on YouTube, just to see how they're using particular techniques or particular indicators, to see what really works for them, what really works for me, and then I take some ideas from them and test it on my demo account. So it's a lot of you have to know a lot of stuff. You cannot be trading without knowing. That's really a recipe for disaster. Don't do that. um, yeah, so when you have a strong knowledge of how things are supposed to look like, and then when you test it out in your demo account, when you test it on your live trade, and you tweak or improve your strategy, make some changes to your strategy, you develop a strong knowledge base. That knowledge is coming from both books and second experience. Okay, so that is the second part of my journey. The first part was moving from emotion to structured trading, and the second part is moving from fundamental analysis to technical analysis, but actually involving more learning. I had to do more learning because knowledge is the essential part of becoming a better trader. Okay, and the third phase was, of course, discipline. So of course, people talk about discipline. People are saying, you got to pay, you got to be decisive about your entry point, and when you're going to enter and things like that. But to me, trading is also about staying and still following your strategy, still following your trading plan, even when you are in good or bad situations. So if you're making profits, of course you're going to stay with your strategy and your trading plan and follow it. But you also have to have the discipline to trust your strategy even when it doesn't work. Okay? Even when it doesn't work, you can't change your strategy every time you make a loss. So let's say I make 6 trades today, 6 trades, And the first three trades are winning trades, and then the fourth trade is a losing trade, and then the fifth trade is a losing trade, and then uh, the trade number seven is a winning trade. So what do I do then? Do I change my strategy? Do I continue to maintain that strategy? Some people, the moment they start losing money, so the first trade that, they have winning trade, winning trade, winning trade, and then they have one losing trade, they start to change their strategy. Maybe not the first losing trade, maybe on the second losing trade, and then they say, that's two losses in a row, maybe I need to change something. So don't do that. You can't do that whilst you're in a trading day. In a trading day, you have to understand that you are trading a specific strategy, and this is a strategy that you research, you test it, and you understand. By changing strategy in real time, just like that, just because you're having some losses, is really bad technique, because you won't be doing analysis, you won't be doing testing, and you are changing your strategy in the middle of trading your live account. Do not do that. Okay, so I had to learn it the hard way, of course, like I mentioned. So this part of my discipline is learning to trust my research, learning to trust my all the tests that I have done on my demo account, all the small trades that I have done on the live account to test the new strategy. I have to trust it, because it is normal to have a trading strategy that have or gives you some losses. No trading strategy will give you all wins 100% every day. No trading strategy exists that will give you that. Even if you pay 1 million to some superstar trader, he doesn't have a strategy that will win 100% of the time. Okay, all good traders, all professional traders, even the legendary ones, will tell you losses are going to happen. It's like rain. You want to go from here to London, you cannot expect sunshine from here to London. There will be rain somewhere along the line. You know, if you're taking ground transport, if you're taking even if you're taking an aeroplane, sometimes you get good weather, sometimes you don't get good weather along your journey, or even when you are at the airport. So that's the same thing as trading. There are going to be down days and there's going to be up days, but you have to have a strategy that works. If you continuously have a lot of losses from your trading, then that's a sign that your trading strategy is not working. Then you can go back to your demo account and change it. But remember, I said move back to the demo account and change it, not change it whilst you are on your live account. That's dangerous. Okay, so that's the thing that I have to do. And I also have to learn about position sizing. When we talk about discipline, I have to have position knowledge of position sizing. In the past, if I have 1,000 in the account, I will try and trade big chunks of the account. So if I have 1,000, I would trade 200, 300, 400 in one trade. So because I want to get rich quickly, I want to make as much profits in the shortest time possible. It doesn't work that way. It doesn't work that way. Why? Because you don't know if you're going to win. Trading is not a 100% certainty activity. It's high risk. You can win with analysis, but by putting too much, it will compromise your discipline. It will compromise your discipline. How? Because it's going to make you emotional. If you have a $100 account and you trade $30 in one trade, you lose that money, you're down to 70. So how many $30 trades can you make with $70? Two trades. You lose another two trades, you're done. Your trading account is gone. You only have a $10 balance. So that is how small positions work. Okay, this is what people say about risk management or position sizing. You trade small amounts of the total account, so that even when you lose money, you're still confident, you're still motivated, you're still not affected. So when you're doing your analysis, when you're doing your thinking, when you're looking at charts, you're still thinking about your discipline. You're still thinking in terms of your strategy and trading plan, and not thinking in terms of, I just lost that money, I just lost that money, that was a lot of money. When you manage your positions well, then you are able to execute well, to implement your strategy well. When you don't trade using correct risk management or position sizing, you will start to trade with emotion, and that's dangerous. So yeah, that's it. And finally, the other thing that helped me during my transformation or help me transform it into a better trader is having a support system. I mentioned earlier that as part of my learning, I looked at a lot of traders. You know, I went into Twitter, I went into YouTube, also went into forums and wherever I could talk to traders, other traders, Reddit. You know, I would see and compare notes with them. Even if they don't reply to me, I can see what they are sharing and I can try that out. See, surrounding yourself with the right resources, with the right people, with the right traders is important. So you need to do the same. Books can only teach you so much. Your experience is only going to teach you so much. By talking to other people, by surrounding yourself with the community of traders, you will be able to learn from the experience of other people, and that can make your learning happen faster. So do that as part of your journey of transforming yourself into a better trader. I've done that and it has been immensely helpful. So yeah, that's what I have for you today. My journey, it is a step-by-step journey of changing myself to become a better trader. And if you are able to apply the same approach to improving yourself, I think you're going to achieve success as well, and I hope you do. Don't rush it. You can't trade in a rush, and you definitely cannot learn in a rush. Okay, so I do want to mention that at the end of this live stream where we are right now, that we have a promotion going on. Details are in the description below, so take that opportunity to use the promo code to earn double deposit when you make a deposit to your account. And hopefully with more money or more funds in your account, you will be able to trade more and learn from it and improve to become a better trader. Okay, so that's what I have for you today. If you have enjoyed the video and gotten value out of it, I would appreciate if you give us a like and subscribe to the channel, as well as share the link to the live stream as well as other live streams we have on the channel to your other friends and traders, so that they could also learn and come and join us in the next sessions. Okay, so until then, I'll see you next time. Thank you. See you guys.